This is the Daily Market Comment by Marios Hadjikyriacos. I'm Maria Pashurdias. Thanks for joining us at XM.com. The European Central Bank will announce the outcome of its strategic policy review at 1100 GMT today, with a press conference by President Lagarde to follow 90 minutes later. Reports suggest the ECB will raise its inflation target to 2% and signal it will tolerate an overshoot if the situation demands it. This would essentially lock the ECB into negative interest rates for a longer period of time. It hasn't been able to hit its inflation target for a decade now, so raising it further would imply it intends to keep its foot heavy on the money accelerator for years. That's bad news for the euro. It would crystallize the imminent divergence of monetary policy between the Eurozone and America. With the Fed moving towards higher rates, but the ECB staying committed to negative rates, yield differentials could widen further in the dollar's favor in the coming years, which argues for a lower euro-dollar over time. The last time the world's two biggest central banks drifted in opposite directions was in 2014 to 2015, a period of carnage for euro-dollar. The US dollar remained near its recent highs yesterday, taking little damage from the minutes of the latest FOMC meeting. The general sense in the minutes was that the Fed is not in a rush to scale back its humongous asset purchase program, but is moving closer to doing so. Meanwhile, the Japanese yen has been the biggest winner from the latest demolition in Treasury yields. Market participants are still mystified by what is pushing bond yields lower. We'll find out the answer by whether the move persists or not. For now, this has lit a fire under the yen, which thrives on lower rates and risk aversion. In the stock market, futures point to losses of around 1% for the major U.S. indices when Wall Street opens today, in sympathy to equities in Hong Kong, which are down almost 3% after new regulations from Beijing. Finally, oil prices remain under heavy pressure for a third session. Market participants seem to be pricing in the risk of a pump-at-will endgame from OPEC as the fallout between Saudi Arabia and the UAE continues, with the latest bouts of risk aversion adding fuel to the retreat. This is today's Daily Market Comment. Thanks for joining us at XM.com.